Bajaj Auto has posted an inline set of numbers for the second quarter of the current financial year. In our Ideas for Profit today, I'll discuss what is the outlook on the company going forward and what strategy should investors adopt now on the stock. Well, the impact of COVID-19 on the sales of motorcycles is waning, as is evident from the quarterly numbers of Bajaj Auto. The volumes in the two-wheeler segment especially improved 5.5%, and that's on a year-on-year basis, and that's in the domestic market, whereas it declined 10.5% in the export markets. Now, the company was able to maintain its retail market share in the domestic market to 18.2% by the end of H1 FY21, as against 18.1% in H1 FY20. What continues to be challenging for the company is the significant decline in the three-wheeler space or the segment. The domestic three-wheeler segment did see volumes decline 78.3% in the quarter gone by, whereas the fall was much lesser in the export markets over here and came in at 19.8%. While we are talking about overall volumes, so year on year there was a decline of 10.2% in volumes. Bajaj Auto posted 7.2% decline year on year in its top line also in Q2. What supported the top line, however, was the 3.4% year on year growth in realization, which came on the back of rich product mix that the company has. Now, despite the lower volumes, EBITDA margin improved 111 basis points on a year-on-year basis and came in at 17.7%. The restriction of merchandise exports from India scheme benefit impacted the margin by 120 basis points. The situation for the entire auto industry post the lockdown has actually started to improve quite significantly, and Bajaj Auto is no exception. Now, the demand for the two-wheeler space is now witnessing a V-shaped recovery, and there has been a shift also towards personal vehicles, and that's post-COVID-19, as people are now preferring to avoid public transport and prefer personal transport instead. Two-wheelers could actually see significant pickup in demand, and the recovery also in the demand is in fact visible in the volume numbers that the company has posted. The timely and widespread monsoon, the record Rabi crop production, the early Kharif sowing, and easy availability of, say, retail finance, they've all together fueled the positive farmer sentiment and are expected to improve the rural income, thereby benefiting the company at the end. Thirdly, a short-term trigger is that demand ahead of the festive season is looking quite strong, and that is evident from the dispatches done by the company in the month of September, right ahead of Navratri and Diwali, these kind of festivals. Overall, the demand for two-wheelers is expected to remain quite strong, and the long-term outlook is also quite positive. The three-wheeler segment, however, continues to remain the Achilles heel for the company, as people have cut down on commuting because of the pandemic. Now, the management indicated that it would take time for the demand in this segment to really recover. Also, international markets have started reacting positively post the easing of the lockdown. In fact, September was the highest ever month in terms of units exported. Now, Bajaj Auto also feels the next leg of growth will actually come from the new variants of the existing products, or maybe even fresh offerings. Now, the company plans to roll out about 6 new models or upgrades in FY21, so that's something to watch out for. As for valuations, Bajaj Auto is trading at a reasonable valuation of 15.6 times FY22 projected earnings, and that's despite the significant rise in the stock that we have seen on the back of the V-shaped recovery in demand. Investors could therefore look to buy this stock with an eye on the long term.